Hello everyone, good morning. This is Sage again live from the 𝐊𝐿𝐴𝐚 studios in Sydney, and you are watching the opening bell. And well, we have been witnessing inflation expectations in the market psychology, carving out a different scenario altogether. And overnight, the US stock markets continued a losing streak on Wednesday as losses across all sectors deepened amid a dwindling risk appetite among investors and a sharp decline of cryptocurrencies. So let us cast an eye now over how market charters are panning out today. Despite the global sell-off across the markets and assets, ASX 200 opened 0.3% higher today, despite iron ore miners weighing down the benchmark index. And on Wednesday, the ASX 200 had one of the worst sessions in the last few weeks. The benchmark index registered a sizable decline of 1.9% and closed at 6,931.7, the lowest closing since April 8th. Global stock indices fell in the volatile trading session on Wednesday following the release of minutes from the latest US Federal Reserve meeting. And the Dow Jones fell 0.48%, while the S&P 500 lost 0.29%. The Nasdaq Composite recovered considerably from the day's low, closing almost flat with a negligible downtick of 0.03%. And at the same time, the 10-year US Treasury yield rose to a three-day high, and the US dollar index also gained. The minutes from the Fed depicted participants agreed that the US economy is still far from the Fed's goals. At the same time, a few policymakers also thought that if the economy continued to show rapid progress, it would be appropriate to begin discussing tapering of monetary policy measures in the upcoming meetings. So, how do we see the market charter today for Australian shares? Today, the Australian shares are expected to reflect sinusoidal trends with a weak lead from Wall Street and lower commodity prices expected to weigh on the benchmark index. Australian gold miners such as Northern Star Resources Limited, Gold Resources, Ramelius Resources, Newcrest Mining Limited and Evolution Mining Limited could trade in the green zone as gold prices edged higher overnight after stocks fell on inflation concerns and broad market sell-off. Then the iron ore futures price fell 0.6% to $211.96 per 500 DMT, while copper was down 3.15% to $457.65 per pound. And noting a fall in the industrial metals price, Australian miners such as BHP Group, Rio Tinto and Fortescue Metals Group could trade lower for the day. Moving on. Oil prices dropped considerably on Wednesday amid concerns over rising COVID-19 cases in Asia and inflation. Brent crude futures was down about 2.9% to $66.69, while US West Texas Intermediate or WTI crude futures lost 3.2% to $63.43 a barrel. It could be a challenging day for the Australian energy producers such as Santos Limited, Australia Oil and Gas Limited and Viva Energy Group to hold their ground. Having said that, the Nasdaq Composite closed almost flat on Wednesday despite a decent gap-down opening, showing strong relative outperformance against the Dow Jones and the S&P 500. However, companies related to their cryptocurrencies in the US took a heavy toll amid panic selling in the crypto market. Shares such as 𝐊𝐴𝐼𝐳 Invest Limited, 𝐷igitalX Limited and Fatfish Group Limited are some of the technology or financial companies that may stay under pressure in today's session owing to their exposure in Bitcoin. And moving on, let us zoom our lens at the crypto charter that defined broad sell-offs across the world. Virtual currencies plummeted sharply on Wednesday, leading to a massive sell-off in worldwide crypto markets. Prices of top crypto coins like Bitcoin, Ethereum, Cardano and Dogecoin tumbled sharply. Combined value of nearly 10,000 crypto coins tracked by coin market cap shrunk by $1 trillion in less than a week to settle at around $1.3 trillion. The cryptocurrencies plunged to mark their worst fall this year after China's crackdown, and Chinese regulators have tightened their restrictions on the use of cryptocurrencies by banning financial institutions and payment companies from providing services related to cryptocurrencies. These services include cryptocurrency trading, payments, clearing and settlement, pledging services, etc. Besides, 2 days ago, a Twitter war broke out between Mr. Musk and crypto purists because of Tesla's Bitcoin suspension over environmental concerns. And crypto analysts have been criticising Mr. Musk for being a manipulator and causing volatility in the crypto industry. Crypto purists also lashed out at Mr. Musk for his pump and dump game. Bitcoin plunged to its lowest level since January at $30,000 following China's decision, while rival cryptocurrencies such as Ethereum sank 28% to $2,444 and Dogecoin crashed as much as 50% to the day's low of $0.215. Then crypto exchange Coinbase plunged about 6%, while Silvergate, the Bitcoin bank, declined as well about 3%. Bitcoin miners, Riot Blockchain and Marathon Digital Holdings lost 7.5% and 9.0% respectively. However, the cryptocurrencies sharply rebounded from the lower levels, still trading with double-digit losses. This week has been overflowing with crypto investors' fear, uncertainty and doubt, or FUD, and the overall crypto market plunged by as much as 45% since Mr. Musk tweeted the Bitcoin suspension from Tesla's payment gateway. The last few days have been stressful for the crypto investors, a reminiscence of the 2017 bubble burst. On a brighter side, however, few optimistic analysts and digital asset managers have been calling this dip a discount for the new entrants. Moving on, let us now look at the major newsmakers in the Australian share market for today. Beginning with the big news coming in from Nufarm Limited, an Australian agricultural chemical company. In the 6 months ending 31st March 2021, Nufarm Limited reported that net profit rebounded to 59 million Australian dollars from a loss of 122 million Australian dollars in the corresponding period of last year. The group revenue was 1.65 billion Australian dollars, an increase of 20% from the corresponding period last year. Next up is flag carrier of Australia, Qantas, has issued guidance updates on its road to recovery, a sustained rebound in domestic travel demand, and the performance of its freight and loyalty divisions. continues to drive the Qantas Group's recovery from the impacts of COVID-19. Based on the current trading conditions, the group expects to be statutory free cash flow positive for the second half of financial year 2021. Importantly, the role of domestic travel demand in the group's recovery is highlighted by the fact revenue from domestic flying is expected to almost double between the first and second half of this financial year. Moving on, Evolution Mining said that it has completed the acquisition of Battle North Gold for 343 million Canadian dollars. And Evolution said it intends to provide further details on the long-term outlook at the Red Lake operation early in the September 2021 quarter, post-integrating the Battle North assets into an updated life of mine plan. Then, resource player Iluka Resources has withdrawn its production outlooks for Sierra Rutile. The company will suspend operations at the project by the year's end. The next big news comes in from Australian agricultural company that reported statutory EBITDA profit rise of 24% during the financial year 2021. The net statutory profit jumped 45%. Then the world's leading provider of drilling services, drilling equipment and performance tooling, Boart Longyear, said that S&P Global has lowered corporate credit ratings of the company to D from CC, and the rating outlook has been removed from Credit Watch Negative. Moving on again. So there are some economic events that can drive the overall market scenario. And going ahead, these are: the Australian Bureau of Statistics, ABS, will release April's employment figures later today. In March 2021, the unemployment rate decreased to 5.6%, while employment increased to 13,077,600. The experts see the Australian dollar reacting to the numbers following the release, and the market would also await April's retail sales data on Friday. In the March quarter, the Australian wages growth rebounded from record lows of the last quarter, but was still far from the levels desired by the Reserve Bank of Australia, or the RBA. The wage price index for the March quarter, a key gauge used by the Reserve Bank and Treasury to measure wages growth, rose 0.6%. Market is expected to take cues from the data in today's trade. Well, thank you so much for joining us. Hopefully that information will be of good use to you, and that is all for now. Stay tuned for more live updates on 𝐊𝐿𝐴𝐼𝑛 TV across the economy, markets and sectors, and Sage signing off for now.